You can't take it with you when you're gone, so how do you make the most of it while you are here? It's time for Your Money Matters with Sam and Dieter from Harness Financial.
We've got both the boys. G'day, guys. We've got both the boys in today, which is fantastic. And like I just want to disclose to people, actually, you're going to do a presentation to our staff, and you've been working on it for a group health insurance deal. And can I just say the early indications are you'll be beating them off with a stick. Okay. I'm in, and a whole lot of other people that are in there, and people are really interested, particularly, to be honest, given the level of premium they're facing for less comprehensive cover. But rather than me selling you for you, the other thing we've got to do at the start of every one of these sessions saying, if someone listened to you and went and did something and it all went wrong, it's not your fault.
Yeah, well, today is about general chat, and you could say general advice, but it's not personalised. If it's not personalised, you shouldn't take action on it. Get personalised advice before you make any final decisions.
Yeah.
Yeah.
All right, health insurance. And geez, you've sent me some stats.
Yeah.
Well, it's a pretty tough market out there for the health insurance. Tell us about it.
Yeah, I just realised you've only got half the notes.
Oh,
Sorry
gosh.
about that. But you do have the important half, so
Yeah.
so there you go. Yeah, I mean, goodness gracious me. Premiums are through the roof. Premiums are through the roof.
Yeah.
But claims for health insurance are also through the roof. And that's what we really want to talk about today. You know, and people just look at their premiums, but the reality is claims is where we need to talk, where we need to chat, where we need to get to the bottom of. But before we get into that, you've got a quote that you really wanted to share. It's not actually related to insurance. What's the context, Dieter?
Yeah, so this morning I was listening to the program and you were reading from A Different Kind of Power. And there's a well-known quote from C.S. Lewis. It would be better to live under robber barons than under omnipotent moral busybodies. The robber baron cruelty may sometimes sleep. His cupidity may at some point be satiated. But those who torment us for our own good will torment us without end, for they do so with the approval of their own conscience.
It would be better to live under robber barons than under omnipotent moral busybodies.
Well, that would go. Graham Linehan, who's been sat in the studio, the writer of Black Books and Father Ted, he got arrested at Heathrow Airport this week for something he tweeted on transgender. He actually had a medical event. His blood pressure went through the roof and the bobbies took him to hospital, but they discharged him on bail. So the hate speech laws in Britain and the moral thought police have got Linehan, and he was back there to appear in court on another hate speech crime because he's gone to live in Arizona now. It all wraps together somehow, doesn't it?
It does.
Yeah.
Well, you can't trust the government necessarily, but you can trust your insurance company. So let's, as long as it's a good insurance company, right, Dieter?
Very much so.
So let's talk about what's going on. We've seen just astronomical increases in claims in the health insurance market in recent years. The first thing is we're seeing a medical inflation rate currently of 14%.
What is medical inflation?
Well, normal inflation, do you want to explain what normal inflation is?
Yeah, so normal monetary inflation is just the increase in monetary supply in an economy, thereby devaluing every dollar.
Yep. And then medical inflation is related to normal inflation, but it's more specific. Essentially, a medical inflation rate of 14% means that the scan you had last year that cost $1,000 now costs $1,400. Who's going to pay for that? Well, the insurance company can only wear it for so long. They need to pass on that cost.
Why does it cost that much, though?
Well, because the medical industrial complex grows more and more complex every year, and there are some phenomenal advancements every year. The reality is medical treatment and medical support is getting more and more expensive.
Yeah, there's also an element of scarcity.
Yeah.
We don't have enough specialists. We don't have enough infrastructure.
And
So-
demand's increasing.
Demand's increasing.
As populations get older, there are more people getting sick, or proportionally.
Yep.
So actually all those things figure in just the market economics, I guess, too.
Yep.
Medical inflation, as you call it. Medical inflation, right?
That's right. And aside from medical inflation, we are seeing premiums from the health insurers increase this year alone between 29 and 47%.
Whoa. Okay. Well-
Now, those premiums have gone up to that degree because claims have gone up to that degree. And there are a lot of reasons for the increase in claims. Since COVID, we've got the delayed diagnoses that we all saw occur when we're all locked down. We've got something wrong with our tummy. We would normally
But we don't go because we're in lockdown and we don't want to put a strain. Oh, so that's not caused by the vaccine or anything. That's a natural phenomenon or an expected phenomenon because of the circumstances.
That issue is completely unrelated to the vaccine.
Yeah.
But then you've also got long COVID issues.
Yep.
You've got vaccine injury issues. You've got the fact that the public health infrastructure is what's 47 years old.
The average age is 47 years.
Yeah, so you walk into a hospital, the average age of the equipment is 47 years old.
Yeah.
So you're seeing this bleed from what would normally be taken care of in the public system, the public health system, into the private health system because the public health system can't do it anymore. So people are claiming more on health insurance than they've ever claimed before in New Zealand history, ever. It's pretty full on. It's scary. So what does that actually mean for an insurance company? Well, last financial year, Southern Cross reported an $85 million loss.
Yeah.
$85 million loss. That's not insignificant. And estimates are that, and this is just an estimate, we don't know for sure where things will land because Southern Cross hasn't released their financial reporting yet, but $100,000 loss or more. NIB, one of their primary competitors, had what's the number there? It's on the chart.
NIB, hang on. Just give me a little.
12 million loss?
$13 million profit in 2024 and then a $10.9
$9 million loss
in the
first half of this financial year.
Yeah.
Wow, those are pretty serious figures.
They are, yeah. But, I mean, Southern Cross's figures are particularly scary. But if we think about Southern Cross, they are by far the biggest health insurer in New Zealand. And because of their size, we really need them to do well.
Yeah.
But they're a slow-moving beast. They've got a lot of customers. They've got a lot of old infrastructure and technology. Goodness me, I mean, some of the listeners today will have seen a 30% increase already. Some might have seen a 47% increase. Not necessarily with Southern Cross. There's lots of different insurers out there. And it's the reality of the situation. But one thing I want to say is if you've got a increase that you're looking down the barrel of an increase and you think, oh my gosh, I can't afford this anymore, you might be right. But with a bit of strategy and a bit of advice, you might still be able to afford it. And the number of people that I come across that have had health insurance for decades and have only ever had a $0 excess is just flabbergasting. I can't believe it. Why would you have a $0 excess when by going to a $2,000 excess you could save 60%? If you've got a $0 excess, the insurance company's probably winning because you're not claiming every year on big stuff. And what about being covered for the GP, or what about being covered for the dentist when you don't go to the GP or you don't go to the dentist all the time? Who's winning? The insurance company's winning. Be strategic. Get covered for non-pharmac drugs, for cancer. Be covered for the diagnostic journey, the MRIs, the exercise ECG, all those sort of things you need. I actually had an exercise ECG on Friday. It was an interesting.
Are you all right?
Yeah.
They find a heart?
They did.
Or just a wallet?
Well, they took my wallet to pay for it, but I had to get an exercise ECG for a key person insurance program that I'm adding to Harness Financial's portfolio because we've taken on a bit of debt and we just want to make sure we're protected. But it's an interesting experience. But these are all tests that are available, and when you go and get them done privately, they need to be paid for, either by yourself or by your insurance company. That's why premiums have gone up. You've got some stuff you want to share.
Yeah, just to put it in context, an insurance company will get X number of premiums per year and they'll pay X number of claims. And when that becomes close and their margins get very tight, so for instance, Southern Cross paid out 93% of the premiums collected in claims last year. That's the highest in a decade. Yeah,
and they say that they pay out 87 cents in the dollar, right? So 87%. they've got a 13% profit margin that they want. The private insurers tend to run a leaner profit margin. But I mean, 93% is just not sustainable. And how do you pay for your rents? How do you pay for your staff? How do you pay for anything?
All right. Hey, this is interesting. Someone says to me, could you guys talk about the health insurance policy you mentioned a while back covering just cancer and how the premiums, they said, were quite cheap? If I got that wrong, I'm sorry. And
no, that's a great question. Yeah. So there's a few options. AIA has a product called Cancer Care, and it's good, and it's very specific in its scope. Partners Life has the option under their private medical cover, which is the highest rated private medical cover in New Zealand, independently rated by QPR Limited. They enable you to take a $10,000 excess, which is the highest excess option available currently, on the medical cover, which brings the premiums right down, really low. And then you're basically only covering yourself for major surgeries, major treatment. I mean, it wouldn't cover a hernia repair, which would be like $9,200 or something, depending on where you are in the country. I think it's a bit cheaper in Nelson for something like that. But yeah, I mean, non-pharmac drugs. We had a client whose father was paying $21,000 a month for a kidney cancer non-pharmac drug out of his own pocket. So his son then came to me and said, "Oh, can I put cover in place, please?" And I was like, "Sure thing." But I mean, if you have a $10,000 excess towards a spend in treatment of $300,000 a year, because your excess you only pay once a year, right?
Yeah.
And that's actually pretty cheap. Yeah. Funnily enough, though, Southern Cross actually waives their excess. Sorry, not Southern Cross. Partners Life waives their excess in event of heart attack, stroke, and cancer. So that's another strategic way of just being covered for the big ticket
Now,
stuff.
look, the great thing in talking to you guys is you are not representing one company.
No.
You can look at the entire market, right?
Yep.
And what is on offer across the entire market. You're not bound to any company or any set of products.
No.
Because you're financial advisors.
We have clients with every major insurer.
Right, okay. Do you then deal with the insurer? Do you go to a brokerage? How does this work if someone comes to you and wants advice?
Great question. We are essentially brokers, but under the modern regulatory framework, the term is advisor, and you've got to be qualified to either give personal insurance advice, fire and general insurance advice, business insurance advice, lending advice, or financial planning advice. And essentially, I direct the personal insurance, business insurance side, and then Dita directs the investment side.
Okay, but it's so good that you can look at the entire market and say, this kind of fits you. Not at just one company, but this fits you and what you need. I'd love you to, because I think it's good for the staff from what I've seen so far. You're making an offering to, if we can get 5 people at the platform into it, give people a taste of the exercise you've gone through with us, and it's fundamentals what you're offering our people.
Yeah, okay, great. So there is only one insurer in New Zealand that offers group insurance for less than 15 staff, and that's NIB. They have a product called Premier Health Business. And if you have more than 5 staff and you put cover in place for them all at once, then they get covered for pre-existing conditions. They get 90 days to add on their spouses and their children. And they'll get covered for pre-existing conditions. They'll just pay for it privately with a direct debit, you know.
But going back to that client you had who's claiming, that pre-existing condition is actually a phenomenal aspect to it.
Yeah.
Because if you have a pre-existing condition, you go for apply for insurance personally, it'll be excluded. You're not going to be covered for it.
Yeah.
Yeah, so many of your listeners, our listeners today.
So literally for me, type 2 diabetes, which is going bloody well at the moment, which is great, and I've had a heart attack.
That's right.
So but I still get the same premium as someone who hasn't had those.
Same premium and same coverage. So let's say that your heart's fine now, but it's deemed that you're going to need some other surgery eventually, but it's not acute. You're not heading in on an ambulance, right? No, this is the thing, right? So they put you on a waiting list. That's 2 years, you know. Well, there's no waiting list with private. There's just when it's available. So you will, when this is in place, you'll be covered. And Steve, who's listening, who's got a bung hip and he's been waiting 2 years for a hip replacement, he'll be covered straight away if he puts it in place for him and his staff.
Is it dental? I haven't read the fine print yet.
Wisdom teeth, Do you still have any wisdom teeth?
No, I've got no wisdom left whatsoever.
No wisdom left. Yeah, fair enough. No, I mean, yes, you can be covered for dental, but the thing is with health insurance, dental has generally, depending on the policy, a $650 annual limit on claims.
Okay, all right.
So it's not
That's
really.
not going to help me.
So anyway, you put in place the base plan, choose in excess of 500, 1,000, 2,000 or more for your staff. Then everyone else can add in the extra stuff, including non-pharmac drugs.
Yeah. Now, here's a question, and it's kind of interesting derivative question. Sean, can you ask the guys if insurance companies just make money directly from the premiums, or do they take those premiums and invest them in managed funds and elsewhere? Do they just hold the money they get in premiums so they can pay out it, or do they say, well, that money's sitting there and no one's claiming it, do we go and invest it somewhere else?
Well, it's quite complex, but I mean, the first thing is that insurance companies also reinsure. So when you've got $1 million of life insurance, only some of that life insurance is actually insured by the insurance company in New Zealand. 50% of it might be insured in Switzerland through a reinsurance company.
Right.
You got that, and then you've also got solvency requirements. Do you want to explain what a solvency requirement is?
Yeah, so they'll have to have a certain amount of liquidity in cash on the balance sheet to fund future claims.
Yeah.
And that's why managed funds can't work in that scenario, because a managed fund is by nature a long-term vehicle. So if you need to suddenly pay out a whole lot of claims and the market's down, it's not the right vehicle for that.
But most corporates will have some level of investments one day. But
that liquidity is very important because that
Look,
needs to
I
be
found
immediate.
something really interesting the other day. We were looking at this issue of genetic testing, which is an issue here in New Zealand. It was a really fascinating. And we found that it's not the Insurance Council that deals with that issue, because medical insurance is under the fine. It was Kirk Hope from the
FSC,
FSC.
Financial Services Council, yeah.
And that they deal, or they lobby or whatever, represent on health insurance. Fire in general is different. That's the Insurance Council in New Zealand. I thought that was really interesting.
Yeah. Fire in general is its own very separate category from insurance involving people and their health. But yeah, I mean, actually, health insurance is a very unique category in New Zealand too, because health insurance tends to not be reinsured. It is all held locally, which is quite challenging for insurance companies. The risk is fully held locally, so they need to respond very quickly to the changes in market.
Now, I'm really sorry. I think we've done this somewhere. Just hopped online to AIA to get a quote to put my age in 65, too old. Yes, I can ring them. Was just after cancer cover, nothing else. Maybe I did get that wrong. Thank the boys, though, for their advice. They should still give you a call. Sharon should give you a call.
If you're not a mechanic, don't work on your own car.
Yeah.
You know, if you're not an insurance advisor.
Oh, boy, you're not telling me anything I don't know. Yeah.
If you're not an insurance advisor, don't work on your own insurance.
Sharon, directly to you, who should Sharon talk to? You or Dieter?
Me or my team of insurance
Sharon,
advisors.
I know you're listening. Get a pen. I'll give you a moment. Get a pen. All right, Sharon, what's your number?
Can't wait to meet you, Sharon. 027 3344812, and my name's Sam, and I'm a really nice guy. Also know what I'm talking about. So.
And you can also look out those details, Sharon. And say you're Sharon, who was on the platform the other day, might even be nice to you. Does anyone else, and I'm going to do it this time, and I'd almost cancel the membership of anyone who didn't listen. You've got 2 minutes to either ring in or text your questions. If you do it after they've left the studio, you're an idiot. Okay? You've got 2 minutes. Questions, because I know it happens. Sean, don't brokers invest premiums until they have to pay the underwriters, says Vanessa.
Good question. So fire in general, again, completely different category. Commercial buildings, fleet, stock, business interruption, earthquakes. These guys need to hold a trust account, and they will pay your premiums for you and give you normally 30 to 90 days to pay the invoice, right? And they will hold off for as long as they can, potentially, and make a tiny little interest margin on that. Yeah. But that's also to cover the fact that some people pay late.
Yeah.
But with health insurance or life insurance, income protection, we don't get paid as advisors. The premiums, they go straight to the insurer. And one of the reasons that's the way it works is to prevent fraud.
Yep.
There is a terminology. What's it called? Grave.
Oh, yeah.
Oh my gosh, forgot.
Yeah, I know what you're talking about.
It's not. It doesn't happen very often, but has happened in the past where someone. Tombstoning. That's right.
Yeah. Okay.
So someone who is trying to commit fraud will go look to the grave sites, take down a whole bunch of names and dates of birth, and submit fake insurance applications.
Yeah.
Very hard to achieve.
It's what Israeli spies do too, and Day of the Jackal and everything there. That's always in the spy movies.
Yeah. So no, when it comes to your premiums, when you're paying directly to the insurer, that's the only way to fly.
All right. We have got some questions we've got to deal with. Sean, can I make my medical insurance an expense as a sole trader?
Not necessarily. I mean, there are potentially some FBT limits that enable you to do that. But a better sort of option would be to make your income protection tax deductible and your ACC cover tax deductible. Yeah.
All right. Do Harness Financial have an office in Christchurch?
We do. If you get in touch with us, my friend, we're actually in Christchurch quite a bit. And I mean, I'm in Auckland on Friday.
It is the year 2025.
Yeah.
Physical location is not that important. Everything's on the web. And I tell you what, these guys would come down to see you just so they could have a day.
There is potential of a Harness Financial Timaru office one day. Timaru, yeah.
Timaru,
Caroline Bay, you've been there? It's
I've been
beautiful.
Caroline Bay. It's a lovely spot.
I heard Hayley Westrander sing at Caroline Bay once. Oh, man.
Oh, okay.
That was amazing.
Okay. We've just get. Is Sam related to Ben? They sound exactly the same. No, I can answer that one. Sean, just like companies need a minimum of, say, 15 employees, can we set up a platform family group and anyone who signs up with the guys so that under the... I don't know, but we are hoping to do it with at least 5 of the platform employees, and I'm going to present...
Nothing's impossible, but some things are very, 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 very difficult.
Sean, what happens when you leave the employer if you've signed up to one of these things?
90 days to carry on privately. And you still maintain all the concessions.
And the same premiums?
You just pay market rates, right? So
your premiums do go up?
Well, not necessarily. I mean, so for example, your premiums would go up, Sean, because you're paying a average age rate, and you've got some young staff, so that brings down the premium. But if it's just market rates. It's actually completely fine.
Yeah, okay. Sean, my health insurance with the Curo Unimed just went up 23%. To listen to this, $380 a month. But that isn't an uncommon figure from talking to my staff here, which is why the deal you're offering us seems very good. I've lowered it slightly by increasing my excess to $1,000.
Good.
But I know it'll keep going up and it's becoming unaffordable for me, so I'm considering cancelling. I've been told changing isn't an option due to previous breast cancer. Yeah,
if you've previously had breast cancer, then moving insurers would probably be ill-advised unless you've got a group scheme. So if you contact your boss and say, or your self-employed yourself and say, hey, can we set up a group scheme?
Should Vanessa give you a ring?
Yeah.
Look, guys, that's been a fascinating session. Got my head going. But I've got to play some ads and make some money in the next
Just 2 points that I want to raise there and why you should not cancel. Heart-related claims has gone up 15% between 23 and 24.
Yep. Cancer-related
claims went up 13%. Colonoscopies went up 17%. So there's definitely underlying issues.
Yeah.
And you don't want to be without cover in that scenario.
That is good. And look, I guess because of our demographic and everything, huge interest in that. Thank you so much,
Huge
guys.
interest in colonoscopies. Huge.
Yeah. Good to see you both.
Your Money Matters with Sam and Dieter from Harness Financial. To make the most out of your money, visit harnessfinancial.co.nz.